Good morning. Welcome to the BF Anderson Technical Report for February the 6th. You know, the best thing about trend following is that it has to do with human opinion and eliminating human opinion and eliminating things that would distract you, because you basically pay attention to the trend. And, you know, it's really not the news that is important, is how does the market or how do prices react to the news. So as you can see here with the NASDAQ, we had a pullback due to the news of the coronavirus, stabilized, and immediately rallied, almost immediately rallied to an all-time new high. So you can clearly see here that this trend is uninterrupted and continues to be strong. Now, on a weekly basis, you know, I have to just say this is a bull market, because the indicator, if we go back here and look at this indicator, you know, this is weekly now. This is every line represents a week. Now, if you get 2 weeks below the 35 week moving average, that is a bear market. Well, sure enough, back in 18, we did have a bear market. So the weekly indicator looks very good. However, I have to emphasize the market is somewhat extended. Now, on our ratio, we do see here that we've gotten a little bit of an uptick here going and actually making a new high on this ratio of the consumer staples to the NASDAQ. So we're comparing technology stocks to toothpaste stocks. And so a good friend of mine actually gave this indicator a name, and he calls it the aggression index, which is where when investors are aggressive, they're buying technology. So when the line is going up, it's telling you that there's a lot of confidence in earnings, primarily confidence in earnings. Now, the blue line here is the 10-week moving average. If we were to break down below that 10-week moving average and that 10-week moving average turned down, that would be troubling. But so far, so good. Now, on the MACD, now remember, MACD is moving average convergence divergence. Now, it's nothing more than where they're taking moving averages and determining whether they're converging or diverging, and you get a reading of what we call momentum. So you can see here, back last year, we got some serious down momentum. Now we're breaking out very positive up momentum, however, is getting somewhat heated. Now that's on the S&P. Now the value line is another story. The value line geometric index, as I've always said, is a equally weighted index. It's the most important index to follow. Now you can see here that, you know, as the S&P and the NASDAQ are making all-time new highs, the average stock is not. I mean, it's a very isolated group of companies that are driving the S&P. It's somewhat deceptive, but we're seeing improvement here in the momentum, in the MACD, and we're actually on a very, very tentative buy signal. Now, on the global Dow, which we're doing the same thing here, on the global Dow, we're looking at the same concept of the MACD. Now, I do want to throw in another component here. This is a moving average called the 1020. We call it the 1020. It's the 10-month moving average versus the 20-month moving average. And we've just noticed over the years that you get golden crosses and you get death crosses. They seem to be meaningful. So with the global Dow, you can see here we're on a golden cross, and also the MACD is on a buy signal. So that's looking good for the global stocks. Now, China, we're using the PGJ, which is the Invesco Golden Dragon ETF, which is basically all Chinese stocks that trade in the United States. So in other words, these are the bigger companies because they have to meet our accounting standards to be able to trade here. So it's kind of a high quality group. But you can see after a very difficult bear market, MACD sell signal, really a lot of down momentum. But then we're now going on to a buy signal. Now you will notice here that we are on a death cross on the moving averages, however, very close to giving a golden cross. We'll have to see a rally in China for that to happen. Now, small caps, we're still having the same old problem. You know, like I say, is all the indexes out there are hitting new highs because they're market cap weighted and the big stocks are driving the indexes. You can see here that the small caps have not, but we're seeing improvement in the MACD, so that could be a positive. Now, on sentiment, we're seeing a little bit of improvement in sentiment. We got way too optimistic here. really off the charts. This is the put-call ratio. When the institutions hedge their portfolios, most of the time they use options. So if they're fearful, they're going to buy puts. If they're optimistic, they're going to be buying calls. So the ratio shows very clearly here that the call buying was far exceeding the put buying, but we're starting to see a little bit of a retracement and a little bit of an improvement. Now, I mentioned earlier that we use an indicator called the 1020. So what I wanted to talk a little bit about this morning is what's going on with the price of oil. A lot is happening there. Now, back in 2015, right around the end of 14 and early 15, we got a death cross in the price of oil. This is West Texas Intermediate oil. And what I've done here is I've taken the price of the commodity off and I've just replaced it with the moving averages. So you've got the 10 crossing below the 20. Well, we basically went to our clients and said we would stay away from oil. In fact, I told one client that our friend of mine who I know has a lot of oil stocks, I said I would run, I wouldn't walk. Well, sure enough, the price of oil has basically plummeted since the death cross, plummeted from about $100 a barrel all the way down here to around $42 a barrel. Then we got a brief rally, but now we're getting another death cross, and you can see these moving averages are in a definite downtrend. So let's take a look at some of these oil stocks just to kind of get a feel for it. This is Exxon. Boy, that's a troubling graph. I mean, we're talking a very severe downtrend. In other words, you got a high, you make a low, you make a lower high, lower low, lower high, lower low, so forth. So this is a downtrend, and you can see it basically has plummeted here. Now, what is really deceptive about a stock like this is that it pays a very large dividend. Well, let me say this to you. They can cut the dividend. If the price of oil continues to drop, they're not going to be able to make their earnings numbers necessary to pay the dividend that they're paying. So if they cut that dividend, which maybe the market's telling you is getting ready to happen, not projecting that, not predicting it, I'm just saying this is a troubling graph. Now, there's something else going on here too. I have here at the top of the graph, I have the monthly price on Exxon compared to the monthly price of Tesla, which is an electric car manufacturer. As you can see, Exxon's coming down making new lows, Tesla's coming up making new highs. Is the market telling us that just like the old days, you had Eastman Kodak was paying a big dividend, by the way, and one of their engineers went to the board and said, I've invented the digital camera. And the family, the Eastman family said, suppress the technology because we don't want to have to cut the dividend in order to build the plants necessary to make the digital cameras. Well, they're bankrupt today. So what's happening here with Exxon versus Tesla, we could be looking at another disruption similar to, if you go back and study the 1920s and you really understand what happened in the 20s, it was the end of the railroad, passenger rail industry being replaced by the automobile industry, and that disruption really caused major economic havoc back in the 1920s. The stock market basically collapsed. So what are we seeing here? Is this something going on that we should be keeping an eye on? We'll talk more about Tesla as I get into it. Now, I did another one just to make another point. Here's General Motors. This is 5-year graph. You can see that the stock has basically gone nowhere for 5 years. Now, they're getting into electric vehicles as well. And again, I've got Tesla down here, and you can see it's making new highs. Now, these are the top 5. Now, we're starting to see the semiconductors coming on here. Now, as I said, as optimism picks up, technology picks up, semiconductors are usually a good way to see that. But with advanced micro devices, again, this was the coronavirus scare, but it's coming out of it. This is a biotech company, AXON Therapeutics. Continues to make our list and is actually starting to look kind of like it's forming a cup here and breaking out. This is Lam Research. Okay, this is another semiconductor fabrication company that makes the equipment to make semiconductors. You can see here again, with autonomous cars, electric cars, with all the technologies, 5G and so forth, you're going to need a lot of semiconductors. Now, this is another semiconductor, a company called STMicroelectronics. Again, you can see that it's starting to firm out and making new highs. Now, here's Tesla. Now, Tesla's an interesting situation. We went into the stock. Now, we got the buy signal on Tesla back here around about the 25th of October. We got a major gap up in volume. You can see the volume here jumped to 30 million shares, which is about twice the normal amount that it trades. And you saw here a gap up out of a base. That was the beginning of this thing, and we believe it had to do with the acquisition of a company called Maxwell Technologies, which has a new battery technology called dry electrode. What the battery technology, what the speculation is that because of this new battery technology, the electric car within 12 to 18 months will reach parity in price with the internal combustion engine. In other words, actually, as these batteries get cheaper and cheaper and cheaper because of mass production, just like TV sets, the price is going to come down. It's called the Moore's Law. And as the price comes down, you're going to see where electric cars will actually become less expensive than internal combustion. There is no maintenance with these cars to speak of. I've actually owned one and found it interesting. But the long and short of it is we got a parabolic move in the stock. It has really taken off. However, we're starting to see a pullback yesterday. Would really like to see here a consolidation between, say, 700 and 800, like form a base, and then Battery Day is coming up in April. They're going to have a day where they meet with the analysts and talk about the new battery technology. Hopefully that causes the stock to get back into an uptrend. The trend is being challenged, but it's not broken. So all in all, things look good. We're in a bull market. Let me know if you have any questions. Thank you very much.